Hello everyone, welcome back. Before we take a quick look around the world of financial news, the first thing up is the current exchange rate for Indians in the UK. Right now, one pound is almost 110 rupees. Currently, the pound and rupee exchange rate looks very attractive, highest in the last 5-6 years. So, it is the best time to send your money to India if you are planning so anyway. And if you are not sure how and where to put your money in India, then do watch this video about FCNRO account where you can avoid the currency fluctuation risk. Alright, let's see what's happening in the world of finance in last month. Let's kick off with the look at the stock markets. As of today, the major indices are showing some interesting movement. S&P 500, it's up by 1.15%. Investor seems optimistic about the economic recovery and corporate earnings. Nasdaq, a solid gain here as well of 1.47%. Tech stocks are leading the charge. FTSE 100, the UK benchmark index, is up by 0.48%. Keep an eye on the Brexit developments and their impacts on the British companies. Remember, these numbers can change rapidly, so stay tuned for the real-time updates. Now let's talk about the interest rates. There is a growing speculation that central bank might cut rates again. Here is what you need to know. First is why. Well, policymakers often adjust rate to stimulate or cool down the economy. Now, impacts on borrowers: if the rate drops, the borrowing becomes cheaper. Mortgage, car loans, credit cards could all see lower interest cost. On the contrary, for the savers, unfortunately, lower rate means less interest earned on a saving account. And that reminds me of Trading 212 Cash ISA, which has a recently reduced interest rate from 5.2% to 5% starting from 9th of September. In my opinion, it is still a good deal. Do watch this video of Trading 212 Cash ISA. A rate cut could boost spending and investment, but it's a balancing act, so not too much for a common man. Moving on to government finances, the pandemic has led to unprecedented borrowing by the government worldwide. In the UK, borrowing levels are at their highest since the crisis began. What does this mean? Governments are funding relief programs, infrastructure projects, and healthcare, but it also raises concerns about long-term debt sustainability. To cover all these, there might be some bad news for the people, like an increase in the taxes. There is already a lot of speculation that the current UK government might be looking for a more tax increase. Now, next one is for different league people, crypto investors. If you are one of them, then the UK HMRC, that's the tax authority in UK, has launched a nudge campaign. What's that? Well, there are nudging crypto investors to report their gains and losses. Why? I think the simple reason is tax compliance. Remember, crypto transactions are taxable events. So if you have been trading Bitcoin or Ethereum, make sure you are on the right side of the tax man. And lastly, insight from the Bank of England. Governor Andrew Bailey recently spoke on inflation risk. He believes inflation risks are diminishing. Bailey suggested the UK economy might have a soft landing as it adjusts to the post-pandemic. Keep an eye on the bank's decision. They impact interest rates and economic stability. And that's wrap up our financial news roundup. Stay informed and remember to subscribe for more updates. Thanks for tuning in.